Good morning, good afternoon, good evening, wherever you are in the world. Welcome back to FX 20 Pips. Today is 26th of January 2023. This is a much more earlier video than my pre-London GBP USD daily video. The only reason is because I will be busy in the afternoon before the London start. I'm not sure I can come back and do a video, edit it, and then put it up live on, or rather put it up, a recorded video on YouTube. And I thought I'd do this before I leave for home. The main point for today is there is US news, which is the at 9:30 US new GDP, gross domestic product. Okay, uh, market is putting in the GDP of lower than the previous one. Okay, and then there are some other highlighted red information here. Okay, so today market will be stagnant until these figures are being released. Okay, until these red figures are being released. So when I say market stagnant, it means that let's go back to the chart. Basically, it means that the market will be ranging today until after the news release. So then you have to follow the candles. Is it going up or going down? I'm currently at this GBP 8 hours chart. Okay, GBP USD 8-hour chart. Just quickly to go through what happened yesterday. Okay, we have the buy zone, the sell zone. Okay, 8 hours, the price dropped back down to below the previous week, went up. Okay, closed there. Did not breach here, did not close below, and then there's a big bullish candle during New York session, close to New York session, and then it goes back to last Friday high. Okay, so price is more or less back to where you were on the beginning of the week. Let me just show you this. Just hang on. Where is the? Let's remove this. Previous day. Okay, so price is back at Monday opening, right? Okay, so Monday, Tuesday, Wednesday, price went down, come up. Did you make money from here to here and back from here to here? Should at least catch some 20 pips from all this big range, isn't it? Okay, so like what I said again, price is back here, back to zero compared to Monday opening. Of significant support resistance is we are still above the weekly high of the inside bar. All right, price try to close below, shot back up. Too few attempts to go back below the weekly high of the inside bar, and price is now back above here, approaching the weekly high, previous weekly high. All right, and then we are also approaching this same figure, 1.24465. Remember, I talk about all these, the important figures, all these in and the figure of 1.24, right? This is all in the my weekly GBP USD, which you will have a link at the end of this video. All right, so keep watching this video. Okay, so let's go down to the, okay, no, let's remain here in 8 hours first. Let me look at the 8 hours candle box. Right, there we go. We are still here. Okay, price went down, went up, two of candle went down, and then this candle finally bring it back to the 8 hour box. So I was looking at this 8 hour candle box. I was seeing that maybe I could have done better by taking this previous 8 hour candle here and here. It will make more sense because I remember before this candle happens, I shifted from here, okay, from this 8 hour candle, and I shifted it up here because of this failure to come down, of these two candle failure to come down, and then I have the idea that price is stuck within these 8 hours. It did, okay, price did stuck in here, but then as it exit out and pull back, that's fine. But then I have two other candles here, which um two continuous candles that break out of the box. Okay, so technically, based on my own principle and theory, this 8 hours box should not continue. Okay, so I was looking at what actually happened, and I noticed that if I had remained the 8 hour box here, okay, which is the previous one, then it does make sense that price never, never goes below this bullish candle at all, right? So well, it is what it is. I know what's going on, so I'm just going to put it back up there, or should I put it back? Yeah, just not to confuse you. Okay, I already done the changes, so I just stick to it. Okay, but at least I know that in my mind there is another um support of 8 hours actually right here. Okay, and then what's next is the um what's next will be the 4 hours. 4 hours chart. Let's go down to, no, let's delete this first. Go down to the 4 hour chart. Okay, let's remove this 8 hours box. 4 hours. What do we have? Okay, right. 4 hour box actually went up. Okay, close down. All right. Yep. Okay. If I look at the previous one, same mistakes. Is it the same mistake? Yeah. Okay. So same. I wouldn't say. Yeah. If I had remained at this one, you can still see that the 4 hours and it's the same idea, right? You still shoot back inside here, and it is still within this range. Okay, for the past 2 days, right? So if you were trading a ranging market, these are some of the good plays. Sell at the top, buy at the bottom, buy at the bottom, buy at the bottom. Maybe you want to sell the top here, maybe, or maybe not because of the US GDP figures out today. Okay, like I said, it's going to be based on my experience, it's going to be a ranging market until the figures is being released. Let's go down to the hourly chart. Okay, hourly chart. Hang on, remove this one. Okay, yeah, much better. All right, it's now 11:36 a.m. my time, so we are about well, for about 5 hours away from London session. It's quite early to actually draw the breakup, but I'll try to just do a preliminary one. Okay, just remember this is a preliminary one. If I'm able to come back early, I'll give you an update on the new one. Otherwise, don't take this as a holy grail thing. Okay, just yeah, I mean trust your own chart. Okay, don't trust me. Trust your own chart. I'm just gonna pick the much bigger one because market is ranging today. There'll be spike. Okay, I'm just gonna have a much bigger space here. Remove the 4 hour range. Okay, so disclaimer, like what I say, this is too early. Usually I don't draw these boxes at this time, but I thought that give you an idea at this stage um, how I trap the price. Okay, this might change as we get nearer to London session if I'm back early today. Let's look at some of the intermittent block. Okay, this is 1 hour block. Basically, how this block is done is price came up, came down, break the structure. They should have one block here. Okay, went up again, and then break the structure again. Okay, this huge bearish candle break the minor structure here. Okay, when I say break a structure, I'm basically talking about this structure here. Okay, I'm not looking at the weekly, monthly, daily structure. Okay, because if I'm at this lower time, I know what the higher time frame is. I know the direction. Okay, but then when we come up to this lower time frame, I'm looking at this lower time frame structure here. Okay, and because it broke through the structure here, so I highlighted the last bearish block candle that broke the structure here, and it's these two. I mean not two. This is the high and the low of this candle, so I block it up, and this become my block. Okay, so as price go down, it do its thing, and yesterday we have our buy and sell zone up, and then price go up, but does it end up to here? Okay, all right. So that's how by drawing blocks and keep drawing them, you can roughly know where price is, higher with higher probability. Okay, not certainty. Okay, there's no certainty in the market, but we, like what I said so many times, we come up with scenarios and to help us better understand where price when it's going up, where is it higher probability of where it's ending, etc., etc. So yeah, basically that should be it. Every time I say this, I'll discover something. You can draw a trend line here. Okay, this is and then here to maybe here, not necessary. Okay, really up to you. And again, maybe you can draw a fib, right? So let's look at this one. The previous day was this. All right. Price was here, went up here, retraced it back to around 78.6, 70.5. And my usual things again, when price retrace here, it could come to here or here. So price actually, you see, the first breakup, where did it stop? It stopped here at this level. Okay, and price went up to, immediately went up to the second level here. All right, and it's been then the seller come in when this block is being activated. When this whole block is being activated, seller came in, push it all the way down, and then followed by retesting of the buy zone here. Okay, so very good retesting of the buy zone here, and then price shot up again back above this one, but then still resisted here. Okay, if you and then price will be ranging here until the US figure is out. Okay, like I say, this is too early, so price might go down a little bit more and then range here. Okay, all right, this is from my experience. Okay, it could be totally wrong here, but based on higher probability, that's what's going to happen. Okay, we go to the 5 minutes chart on yesterday. I'm just going to talk about this retest of the buy zone. So like I said, price went up. Okay, hit the fib target 1, fib target 2, and then the price came back down. Okay, because there is no continuations bullish. There is the seller came in, buyer shoot up again, but seller dominates, came in and closed below this bullish candle. So you should expect price to keep going down. Okay, once it hit here, you know that should be a reaction area, so that we have a continuous strong bearish candle. But what happened? No follow through. Okay, why? Because buyer came in again. All right, sellers exhausted, buyers came in, and then how do you trade this then? Okay, it should give you confidence that this rejection week, you have buyers coming in. All right, close at the top side. Okay, and then when price open, it goes down, and the moment it shoot up again, all right, I would buy. Stop loss here. Simple as that. Okay, even though it closed below here, below this bearish candle, but itself closed on the high side. Okay, that's mean with two rejection week, rejection week, rejection week. What are the chances? You have to buy. Okay, and the moment it closed above here, see it closed with a clean top. All right, and then you can see that this would then be the area where they this small area retested, and price keep going up. All right, and that's the reason why. So you need to keep watching the chart, keep looking at all these candles to understand what's going on. If you had enter at any of these candle, your stop loss will be the previous candle, previous year, and previous year. Okay, so this will be a lowest point here for the candle because there's no other structure being created. So even if you buy here, stop will be here. You buy here, your stop will be here. You buy here, your stop will be here. You buy here, the stop will be here. Okay, whether you want to buy here or not, that's up to your own trade management. Okay, and that is why if you can, you enter here. All right, with the stop loss here, that's the best. Okay, as price go up, create this low. Okay, this is just a minor low. Okay, because it's not it didn't even break above this high here. It didn't even break above the high here. It's just a minor low. But then if you want, you can move your stop loss to here. Okay, that was yesterday trade. Okay, I'm just trying to explain that to you. Yeah, so going back to today, this is where price is. So I'm just going to go back to the hourly chart, and yep, I'm going to hide away the block, remove the fib. Okay, so this will be the trade setup for myself. All right, that's all for today. If I come back early before London, I'll do an update. Otherwise, it's going to this is what it is with the limited time I have. All right, see you on the next one, and good luck, everyone. Goodbye.